The Genius Act creates the first federal regulatory framework for stablecoins like USDC, signed by former President Trump in 2025. This landmark law sets clear rules for fiat-backed stablecoins. Before, regulation focused mostly on state-level oversight, causing confusion across the crypto space. Now, the Genius Act establishes uniform USDC regulation, boosting trust in major payment tokens such as USDC, USDT, and DAI. This new framework could dramatically increase institutional interest and adoption within the US crypto market. But why does USDC regulation matter so much for DeFi platforms and broader crypto liquidity? With clearer stablecoin regulation, platforms relying on stablecoins expect more consistent USDC compliance and reduced operational risks. Stablecoins act as vital digital dollar anchors in trading, providing steadiness amid volatile tokens. However, lack of federal crypto laws constrained growth and market confidence, limiting utility for institutional portfolios. The Genius Act reverses this by defining a transparent, streamlined legal framework for USDC regulation. Importantly, it signals U.S. ambition to lead blockchain regulation, previously dominated by less regulated international players. This regulatory clarity sustains the evolving DeFi ecosystem and strengthens financial oversight nationwide. Market data reflects cautious optimism, with USDC maintaining a stable $1 value and market cap above $64 billion by July 2025. However, recent trading volumes decreased noticeably, hinting at uncertainty during regulatory transitions. The Genius Act may reverse these trends by encouraging crypto compliance and greater trust. This paves the way for stronger stablecoin liquidity, essential for borrowing, lending, and staking within decentralized finance under new DeFi rules. Are you ready to see how USDC regulation reshapes crypto's financial landscape? Transitioning from regulatory uncertainty to structured USDC compliance marks a huge win for stablecoin projects. Circle's USDC stands to benefit greatly, since regulators now provide precise crypto policy instead of ambiguous interpretations. This transparency lowers operational risks for issuers and users alike. Investors and crypto institutions can embrace stablecoins without fearing sudden legal crackdowns or fragmented state regulations. As a result, the ecosystem gains much-needed stability, encouraging legacy financial players to participate in DeFi's explosive growth. Now, let's consider how institutional adoption may accelerate from the Genius Act's impact. Enterprises require regulatory predictability before allocating large capital to crypto assets. Dollar-backed digital tokens like USDC enable seamless value transfer without volatility, appealing to traditional finance infrastructures. With this regulatory framework, US-based exchanges, hedge funds, and banks could expand crypto service offerings securely. This influx of institutional capital may increase liquidity and create new blockchain regulation opportunities throughout the sector. Remember to like and subscribe to stay updated on critical USDC updates and regulatory news. The Act doesn't specify exact technological protocols, but focuses on foundational crypto licensing and legal clarity. Stablecoin issuers must comply with federal guidelines on transparency, reserve backing, and consumer protections. These requirements should increase market confidence, while curbing fraudulent or risky stablecoin practices flagged by crypto audits. Consumers benefit from stronger assurance that their stablecoin holdings are reliably pegged and safe. This regulatory bedrock encourages innovation within boundaries while fueling sustainable crypto finance solutions. Want deeper analysis on how these crypto laws impact decentralized applications? Leave a comment below. I personally trade on a rock-solid crypto exchange boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. Shifting focus to competitive dynamics, the Genius Act strategically positions the US ahead of other jurisdictions, lagging in formal stablecoin oversight. While other countries impose heavy restrictions, the US balances innovation with robust financial oversight. This supports American companies in developing crypto products and services, fostering global leadership in blockchain regulation. Additionally, this step may inspire international regulatory alignment or spark cross-border collaborations among crypto-friendly nations. Market dominance of USDC might further solidify as USDC regulation extinguishes uncertainty. The impact on competing stablecoins like USDT or emerging algorithmic stablecoins remains to be seen. In decentralized finance, regulated stablecoins serve as critical collateral and liquidity sources. DeFi protocols often depend on stablecoins to offer lending, borrowing, and yield farming without exposing users to volatile assets. A Genius Act's federal standards help DeFi projects attract cautious investors wary of regulatory risks. This can accelerate DeFi's maturation from fringe innovation to institutional-grade financial infrastructure. However, heightened oversight brings challenges like compliance costs and limits on fully decentralized models. Balancing innovation with regulatory measures remains key for programmable money's future. As we conclude, remember the Genius Act marks an unmistakable turning point in cryptocurrency history. It transforms how U.S. regulators engage with stablecoins, shifting from fragmented crypto compliance to cohesive federal law. This equips investors, developers, and institutions with a stronger foundation to build trust and expand crypto adoption. The stablecoin market, especially USDC, is poised for growth, backed by clearer rules and increasing institutional embrace. Stay tuned for future USDC updates as market dynamics respond to these regulatory shifts. Don't miss critical crypto licensing insights, so hit that notification bell. Understanding USDC regulation is essential for anyone invested in or curious about crypto's future. Stablecoin regulation defines current trading environments and shapes long-term industry trust and innovation. Keep following crypto policy news closely, because this regulatory evolution signals broader acceptance and maturity of digital assets. If this breakdown helped, drop a like and share how you think stablecoin oversight might evolve next. The path to widespread crypto adoption is clearer and more attainable thanks to federal frameworks like the Genius Act. In summary, the Genius Act's federal USDC regulation sets the stage for increased trust, institutional adoption, and ecosystem growth. It defines U.S. leadership in crypto innovation by addressing past regulatory gaps. With clearer rules, stablecoins better serve as liquidity anchors and DeFi catalysts. Market participants should embrace this milestone as a positive signal toward mainstream digital finance. The coming months are critical to observe how this legislation influences trading volumes, investor confidence, and new product development. I personally trade on a rock-solid crypto exchange boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. The future looks promising for stablecoins, fueled by smart, consistent USDC regulation from the Genius Act.